Welcome back, guys. Welcome to Forex Beginner's Guide video 108. In today's topic, we will be discussing what is consolidation. In Forex trading, consolidation refers to a period where the price of an asset like XAU moves within a narrow range and doesn't show a clear uptrend or a downtrend. During consolidation, the market is pausing or taking a break after a previous trend, and it's characterized by sideways price action. Think of it like when you're driving a car on a highway and you need to slow down because of traffic. The price is still moving, but it's not speeding up or slowing down in any clear direction. It's just consolidating before deciding which way to go next. How does consolidation work in XAU? Let's take XAU as an example. Suppose the price of gold has been rising steadily from 1800 to 1850. After hitting 1850, instead of continuing to rise, the price starts moving between 1840 and 1850, fluctuating up and down within a narrow range. This is called consolidation. During consolidation, the price of XAUUSD is not trending up or down. Support and resistance levels become more apparent. For instance, 1840 might be acting as a support, the lowest point, while 1850 acts as resistance, the highest point. The market is waiting for new information, whether the economic reports, news, or technical signals before deciding the next move. Why does consolidation happen? Market uncertainty. When there may be uncertainty in the market, such as lack of major economic events, which leads to traders waiting for new signals, profit taking. After a significant move like a big uptrend or downtrend, traders may take profits, causing the price to level out temporarily. Number three, waiting for breakout. Traders are often waiting for a breakout where the price will either break above the resistance or below the support, indicating the next big move. How to trade consolidation. In consolidation phase, you can use range trading strategies. You buy near the support level and sell near the resistance level. Example, if gold is bouncing between 1840 and 1850, you could buy near 1840 and sell near 1850. Breakout trading. Another approach is to wait for breakout. If the price breaks above 1850, it may signal an uptrend, and if it breaks below 1840, it may signal a downtrend. In this case, you would enter a trade when the price break out of the consolidation range. Tight stop losses. Since consolidation involves a lot of back and forward movement, it's essential to use tight stop loss. If the price breaks out of the consolidation range, your stop loss will help minimize potential losses. Example of consolidation in action with XAUUSD. Let's say XAUUSD is consolidating between 1840 and 1850 for several days, moving up and down within the range. As a trader, you might buy when the price hits 1840 and sell when it hits 1850. But then one day the price breaks above 1850 and continues rising. This is known as a breakout from consolidation. You could enter a buy trade expecting the price to keep moving up, or if the price breaks below 1840, you could enter a sell trade. Why is understanding consolidation important in XAUUSD? First, profit potential. Knowing when the market is consolidating gives you a chance to make profits during sideways movement or to prepare for a potential breakout. Number two, risk management. During consolidation, the price can be unpredictable. Using tight stop losses and recognizing breakout points help you manage risk better. Trading strategy. Consolidation provides trading opportunities both for range trading and breakout trading, two key strategies in Forex trading. That was all about consolidation, guys. I hope this all made sense. Make sure that you watch all the other videos and get all the information before you jump into trading and do anything to do with this industry. I hope this made sense, guys. See you in the next video.